Global Monetary Watch, July 31st, 2026. Before we get into today's Iraqi dinar developments, there is one distinction that needs to be made clear from the beginning. The story surrounding Iraq's currency is not simply about a number printed on a screen or a rumored exchange rate announcement. It is about monetary policy, banking reform, international financial access, oil revenues, government finances, and Iraq's broader effort to reconnect with the global economy. Some developments are significant, while others are being interpreted far beyond what the available evidence supports. So today, we're separating the documented developments from speculation and looking at what the current information actually tells us. The starting point is the official exchange rate framework. For Iraq's 2026 federal budget, the dinar has been maintained at approximately 1,300 Iraqi dinars to $1. That figure is important because it represents the baseline used in the country's current fiscal planning. There has been extensive discussion in online communities about whether the existing rate could eventually change dramatically, but the current policy framework does not establish such a change. The distinction is important. A budgetary exchange rate assumption is not automatically a signal of an upcoming currency adjustment. At this point, the documented policy direction emphasizes monetary and economic stability. That does not mean that nothing is happening within Iraq's financial system. In fact, some of the most important developments are occurring away from the headline exchange rate. One major development involves the country's banking sector and its relationship with international financial institutions. 7 Iraqi banks have reportedly been cleared to resume non-dollar international correspondent banking activities following discussions involving the Central Bank of Iraq and the United States Treasury. This is significant because correspondent banking relationships are essential for connecting domestic financial institutions with the international banking system. They allow banks to process international payments and participate in broader financial transactions under established compliance requirements. The development becomes easier to understand when viewed against the banking restrictions Iraq faced previously. In 2025, a substantial number of Iraqi banks faced restrictions involving US dollar transactions because of concerns related to compliance and financial controls. At one point, reports indicated that 35 of Iraq's 72 operating banks had lost access to US dollar transactions. That represented a major challenge for the country's financial sector because international banking connectivity is essential for trade, investment, payments, and broader economic activity. The July 2026 development therefore represents an important step toward restoring international financial relationships for selected institutions, although it does not mean that the entire banking system has been rehabilitated. The banks identified in the reported framework include International Development Bank, Al-Janub Islamic Bank, Mashreq Al-Arabi Bank, Al-Mosul Bank, Kurdistan International Bank for Investment, Investment Bank of Iraq, and Arab Islamic Bank. Their eligibility to resume correspondent banking relationships is connected to a broader framework involving Iraqi authorities and the U.S. Treasury. This is an institutional development rather than an exchange rate announcement. It demonstrates progress in financial sector connectivity, but it does not establish a new value for the Iraqi dinar. Understanding that difference is essential when evaluating the significance of the announcement. There is another important layer to this story. Iraqi economists have cautioned that restoring banking relationships by itself does not automatically transform the wider economy or produce an immediate change in the dinar's exchange rate. The effectiveness of the banking rehabilitation process depends on broader reforms, transparency, compliance procedures, governance, and clearly defined mechanisms for strengthening the institutions involved. In other words, reopening access is one part of a larger process. The banks still have to operate within international standards, and Iraq still has to demonstrate that the reforms are sustainable. The development is therefore meaningful, but its economic consequences should be assessed over time. The wider economic environment also presents serious challenges. Iraq entered 2026 facing pressure from disruptions in the regional energy and transportation environment. Oil remains the central source of government revenue, which means that interruptions to production or exports can quickly affect public finances. During the period discussed in the source material, regional conflict and disruption around the Strait of Hormuz contributed to a sharp reduction in Iraq's oil export capacity. Production reportedly fell substantially below normal levels during the most severe disruption. For an economy heavily dependent on petroleum revenue, even a temporary interruption can create significant fiscal pressure. That pressure was reflected in Iraq's budget position. During the first 4 months of 2026, the country recorded a fiscal deficit estimated at roughly $5 billion. By the end of May, the cumulative budget deficit had reportedly reached around 13 trillion Iraqi dinars, compared with approximately 5 trillion dinars during the corresponding period of the previous year. These figures illustrate how quickly external shocks can affect Iraq's public finances. They also show why the country's economic reforms cannot be separated from oil market conditions. A financial system can improve structurally while the government simultaneously faces short-term revenue challenges. Despite those pressures, the broader picture is not simply one of economic deterioration. Iraq is also pursuing structural reforms and attempting to attract greater international participation. During Prime Minister Mohammed Shia al-Sudani's visit to Washington, financial and commercial initiatives involving American institutions were discussed. Among the developments was an agreement involving J.P. Morgan to establish a presence in Iraq to support financing for U.S. companies operating there. Such a move would potentially strengthen financial connections between Iraq and international businesses, although the practical economic impact depends on implementation and the broader business environment. The same period also produced a large number of memorandums of understanding involving Iraqi and international entities. More than 48 agreements were reported across areas including energy, healthcare, and technology, with a combined potential value of approximately $60 billion. However, this number requires careful interpretation. Memorandums of understanding are not necessarily completed investments. They generally represent frameworks for cooperation or future negotiations and can require additional approvals, financing, feasibility assessments, and contractual agreements before projects become fully operational. Therefore, the reported figures should not be treated as money already invested in Iraq. Another development attracting attention is Iraq's progress toward membership in the World Trade Organization. In July 2026, Iraqi authorities stated that requirements associated with the country's WTO accession process had been completed and that relevant documentation had been submitted in Geneva. WTO accession is a long-term institutional process that involves trade rules, regulatory standards, market access, and dispute resolution mechanisms. If completed, membership would further integrate Iraq into the international trading system. However, WTO accession should also be understood as a gradual institutional development rather than an immediate currency event. For the Iraqi financial system, greater integration into international trade can have broader implications over time. International investors typically evaluate countries based on many factors, including regulatory stability, banking infrastructure, trade rules, political conditions, access to financing, and the reliability of financial institutions. Improving those areas can make an economy more understandable and accessible to international businesses. But these changes do not automatically determine the exchange rate. Currency valuation is influenced by monetary policy, foreign exchange conditions, fiscal policy, trade flows, reserves, inflation, and other economic variables. Another subject that continues to generate substantial discussion is the possibility of redenomination. The Central Bank of Iraq has previously discussed the concept of removing zeros from the currency as a technical monetary reform. The basic purpose of a redenomination would be to simplify transactions, accounting, cash management, and the structure of the currency system. This concept is often misunderstood because removing zeros from banknotes does not inherently increase purchasing power. If 1,000 existing dinars were converted into one new dinar under a redenomination, prices, wages, balances, and other monetary amounts would generally be adjusted proportionally. That distinction between redenomination and revaluation is extremely important. A redenomination changes the numerical expression of monetary units. A revaluation, by contrast, refers to a change in the official value of a currency relative to another currency or monetary benchmark. These are different policy actions with different economic implications. Treating a hypothetical redenomination as though it automatically multiplied the real wealth represented by existing currency holdings creates a fundamental misunderstanding. Any future monetary reform would need to be evaluated according to the actual terms announced by Iraqi authorities rather than assumptions circulating through online communities. At the same time, Iraq's central bank has been working on initiatives designed to strengthen domestic economic activity and the financial sector. One reported lending initiative has a value of approximately 1.2 trillion Iraqi dinars, equivalent to roughly $900 million at the current exchange rate framework. The program is intended to support areas including education, veterinary medicine, and liquidity within the banking sector. Initiatives like these are part of a broader effort to increase financial intermediation and encourage productive economic activity. Their effectiveness, however, depends on implementation, access to credit, institutional capacity, and the ability of banks to manage lending responsibly. The central bank has also been expanding the framework surrounding money exchange companies and seeking additional channels for financial activity and revenue generation. These measures fit into a larger attempt to modernize Iraq's financial architecture. For many years, Iraq's financial system has faced challenges involving cash dependence, banking modernization, international compliance, and limited integration with global financial networks. Addressing those problems requires multiple reforms rather than one announcement. Banking rehabilitation, digital financial services, stronger compliance, improved governance, and greater international connectivity all form parts of the larger transformation. Prime Minister al-Sudani has described the progress involving banking rehabilitation as evidence that years of work toward modernizing Iraq's banking sector are beginning to receive greater international recognition. The significance of that argument comes from the combination of institutional actions taking place alongside the statements. International banking relationships, financial sector reforms, trade integration, and investment discussions are all components of the broader economic strategy. Nevertheless, individual announcements should not be interpreted in isolation. The long-term outcome depends on whether reforms continue, whether institutions meet international standards, and whether the government can maintain economic stability during periods of external pressure. There are also major vulnerabilities that remain unresolved. Iraq continues to depend heavily on oil revenue, leaving government finances exposed to changes in production, exports, prices, and regional security conditions. The country also faces a significant backlog of stalled projects, with thousands of projects requiring completion, restructuring, or additional financing. Emergency spending provisions may help the government manage temporary revenue disruptions, but they do not eliminate the underlying fiscal challenge. Sustainable improvement requires stronger non-oil sectors, more efficient public spending, productive private investment, and continued institutional reform. This is why the current Iraqi dinar story cannot accurately be reduced to a single question about whether the exchange rate will suddenly change. The evidence available in July 2026 points toward a much more complicated transition. Iraq is simultaneously dealing with fiscal pressure, oil market vulnerability, banking reform, international financial integration, trade negotiations, investment initiatives, and domestic economic development. Some indicators point towards stronger institutional integration, while others highlight continuing weaknesses. Both sides of that picture matter, and ignoring either one produces an incomplete understanding of the country's economic situation. The current exchange rate framework remains one of the clearest reference points. The 1,300 dinar per dollar rate continues to serve as the basis for the 2026 federal budget framework discussed in the source material. There is no established policy announcement in that material confirming a dramatic overnight exchange rate transformation. That does not determine what policies Iraq may consider in the distant future, but it does establish what the current documented framework looks like. Responsible analysis therefore requires separating confirmed policy from expectations, rumors, and hypothetical scenarios. The banking developments are perhaps more important when viewed from that perspective. Reconnecting 7 banks with international correspondent banking channels does not produce an instant currency adjustment. Instead, it addresses one of the structural weaknesses that has limited Iraq's integration with the international financial system. If banking reforms continue and compliance standards improve, The cumulative effect could be greater international connectivity. But that process involves institutions, regulations, technology, governance, and time. A financial system is not transformed by a single agreement. It is strengthened through sustained implementation. The same principle applies to WTO accession, international investment agreements, and the potential presence of major global financial institutions. Each development can contribute to Iraq's broader economic integration, but none should automatically be described as an exchange rate event. The distinction between structural reform and currency speculation is one of the most important themes in understanding the Iraqi dinar today. Structural reforms can influence confidence, trade, investment, and financial efficiency over time without producing an immediate change in the official exchange rate. So, as July 2026 comes to a close, the most accurate description of Iraq's financial story is one of transition under pressure. The country is attempting to modernize its banking system and deepen international financial connections while simultaneously dealing with oil dependence, fiscal deficits, regional instability, and unfinished development projects. The progress is real, but so are the challenges. The banking rehabilitation framework is significant. The WTO process is significant. International investment discussions are significant. Yet none of these developments, by themselves, establishes a new Iraqi dinar exchange rate. That is why the most useful approach is to focus on verifiable developments and official policy rather than dramatic claims. Watch what the Central Bank of Iraq actually announces. Watch the government's fiscal position. Watch banking sector reforms and international compliance measures. Watch developments involving oil exports, international trade, and the country's WTO process. These indicators provide a much clearer picture of Iraq's economic direction than unsupported claims about secret rates or imminent currency events. The story is still developing, and the evidence deserves to be examined carefully as new information emerges. For Global Monetary Watch, the goal is to keep the discussion centered on documented developments, economic context, and clear explanations. The Iraqi dinar remains part of a much larger story involving Iraq's banking sector, government finances, international trade, energy markets, and institutional reform. Some developments may prove highly consequential over the long term, while others may have more limited effects than initially expected. What matters is distinguishing those possibilities from confirmed facts. As new announcements emerge from Iraqi authorities, international financial institutions, and other official sources, the picture can be reassessed using the latest available information. Thank you for staying with Global Monetary Watch on July 31st, 2026. If you follow developments surrounding Iraq's currency and economy, continue checking the evidence behind major claims and remember that financial information can change as policies and conditions evolve. Today's developments provide important context, but they do not eliminate the uncertainties facing Iraq's economy. The country is undergoing a complicated financial and institutional transition, and understanding that process requires patience, context, and attention to verified information. Stay informed, examine the details, and follow the developments as they are officially confirmed.